Why is the dollar crashing? Just a few months ago, it was surging. The dollar had been riding high, thanks to markets being exceptionally optimistic about the US economy and a widespread belief that Trump's tariffs would hurt other economies more than America's. But recently, anxieties around Trump's unpredictable trade policies have sparked a major sell-off. And in the past couple of days, that sell-off has turned into a full-blown crash. So in this video, we're going to take yet another look at the declining dollar, what it means for the US economy, and how it could set up an uncomfortable showdown between Trump and the Federal Reserve. The dollar was actually riding pretty high until about a month ago. Once it started looking like Trump might win the election, back in around September last year, the dollar surged against other currencies. The best way to illustrate this is with the so-called dollar index. This index measures the strength of the dollar against a weighted basket of other major currencies. According to this index, the dollar rose steadily from late September and peaked in early January, reaching nearly a 3-year high. So why did the prospect of Trump's re-election, and then his actual re-election, trigger such a big surge in the dollar? Well, there were basically 3 reasons. First, investors expected Trump's policies of tax cuts and tariffs would lead to higher inflation. Higher inflation typically means higher interest rates from the Federal Reserve, and higher interest rates make saving in dollars more attractive. Second, there was a widespread belief that Trump's trade wars would hurt other countries more than the US. This made other countries' currencies less appealing, and that boosted the dollar. Because remember, the dollar's value is relative to other currencies. Third, many in America's business community felt that Trump's promised agenda of tax cuts and deregulation would boost economic growth. Now, this wasn't necessarily a good thing from Trump's perspective. After all, he and senior members of his team have occasionally suggested they wanted a weaker dollar. Why? Because a weaker dollar helps make American exports more competitive and supports his agenda of reindustrializing America. Still, the dollar's strength was a testament to genuine optimism about Trump's economic policies. But a couple of months ago, that changed. The dollar started slipping. Part of this was because investors became slightly more optimistic about other economies, like Europe, China, and Japan. That strengthened their currencies, and therefore weakened the dollar. But the bigger reason? It was becoming increasingly clear that Trump's policies, especially his tariffs, were just too unpredictable. That unpredictability started to take a toll on both consumer confidence and business investment. And now, that slippage has accelerated into a full-blown crash. Since Trump's Liberation Day, as of Monday morning, the dollar index is down nearly 10% from its January high, and still falling. At the same time, the euro is now trading at $1.14, its highest level since 2022. That's a remarkable turnaround. Just a couple of months ago, people were seriously talking about the prospect of the dollar and the euro reaching parity. So why is this happening? Well, as you probably already guessed, this collapse reflects the fact that markets and investors are no longer optimistic about Trump's economic policies, especially his tariffs. And it's not just about the size of the tariffs, though that's certainly part of it. While Trump has scaled back some tariffs, the 145% tariff he imposed on China will effectively sever all direct trade between the world's 2 biggest economies. That alone carries massive economic consequences. But it's also the erratic way these tariffs are being applied. No one knew how big the Liberation Day tariffs would be until Trump unveiled his infamous Chart of Doom. And no one knew he was going to roll them back until the very last minute. This kind of unpredictability has seriously undermined both consumer confidence and business investment. That's why most analysts now think the American economy is heading toward a recession. And here's the irony. This is terrible for Trump's stated project of reindustrializing America. Building factories, power plants, and other industrial infrastructure takes time, and massive long-term investment. But that kind of investment needs economic certainty. And Trump's policy unpredictability is the opposite of that. And on top of that, the tariffs themselves are badly designed. Take Trump's recent exemption for Chinese-made smartphones. Great for American consumers, who now won't have to pay hundreds more for their devices. But terrible for American producers. Why? Because if you want to manufacture smartphones in the US, you now have to compete with exempted Chinese imports. And you still have to pay a 145% tariff on components like batteries or screens that you might need to import from China. This puts American producers at a serious disadvantage compared to their Chinese counterparts. The point is, Trump's tariffs have spooked markets and investors, and that's why the dollar is selling off. This same fear is driving a concurrent sell-off in U.S. Treasuries, also known as government debt. That sell-off has caused a spike in borrowing costs for the federal government. For instance, the annual yield on a 10-year Treasury bond has risen from 4% to 4.5% in just the past week. That's an insanely steep increase by Treasury market standards. All of this is pushing the U.S. closer to a debt crisis, especially because earlier this month, Republican majorities in Congress approved a blueprint budget that could add $5.8 trillion in borrowing over the next 10 years. That's according to the Nonpartisan Committee for a Responsible Federal Budget. This whole scenario feels dangerously reminiscent of the Liz Truss fiasco in the UK. Truss tried to borrow massive amounts of money, which led to a collapse in the pound, a spike in bond prices, and ultimately, intervention from the Bank of England. So what does the dollar's collapse mean for the U.S. economy? Well, while it might help American manufacturers and exporters become more competitive globally, any potential gains from that will likely be wiped out by the chaos of Trump's tariffs. Instead, the main consequence of the dollar's decline will probably be a sharp increase in inflation. Why? Because imports for American households are about to get more expensive. Trump's tariffs were always going to be inflationary in the short term, but there was at least some hope that a strong dollar would offset that pressure. Now that the dollar is declining, that inflationary pressure is only going to get worse. And here's where things get even more dangerous. If inflation rises again, the Federal Reserve may need to raise interest rates to combat it. But what happens if Trump starts leaning on the Fed to stop raising rates? Or worse, tries to assert political control to cut interest rates? That could really spook the markets. If Trump wins that showdown and forces the Fed to keep rates low despite rising inflation, the risk of runaway inflation in the US becomes massive. Regardless, one thing is certain. In 2025, the news cycle will continue to be dominated by these same major figures. But the big question is, who's really the most influential right now? With that said, thanks for watching, and until next time.